I'm not gonna lie, I'm kind of bullish for OPEX. Me too. Ding ding. The day is done. ETF rebalance starts tomorrow. All right. So, not a very interesting day. Still down on the day. Kind of just bottomed out in this low range. We didn't really seem to have enough pressure to break down below 120. Where the put buyers would have been able to capture some profits. We do see some small number of 125 and 120 puts being sold off today, mostly on the initial drop here. Um, but I think these are more recently purchased. These may have been profitable. You see the subsequent sell off of those puts kind of drive us up here. How fucked am I that I've only entered 20% of my plan position for OPEX because of good faith violations? The rest of my money won't unlock until tomorrow. Am I fucked if they run us early? No. Even on the 19th in November, that Friday, like we didn't run up like crazy right at market open, right? It was like a slow climb into the end of the day. DM'd you my Zen picture. Thanks. Back to the stock. Is a cost basis of 124 solid? Yeah, it's a good cost basis. I mean, the average cost basis is still like 180 to 162. It might be a little lower on the bottom end, but it's still relatively high. If puts get shed tomorrow, will that help upside movement tomorrow? Yeah, a little bit. What PM volume are you looking for? Pre-market volume? I mean, above 40,000 is significant. If we have under 10,000 pre-market volume, that's bad. No problem, little orphan Danny. So let's take a look at our long-term chart here. So we might be seeing a little bit of a bounce. Well, we did see a little bit of a bounce on our low today, right? Which could put us kind of in a little bit of a like it's it's tight. We're stuck between two very hard resistances right now, and we're not really breaking down below 120, and we're not really breaking up above 126, right? Um, even into the close of today, we barely tapped over. Another $3 million in the money calls exercise today. So I expect tomorrow morning another big spike near market open. Similar to today's, maybe a little more actually, because I think the in the money exercise calls are a little bit higher today. So we'll see, market makers resolve that imbalance probably tomorrow morning. If we're still trading at around 125, that could be enough force to push us up over 126.70. If we climb over 126.70, it's gonna get a little spicier. Once we have some nice support under us, it'll be a little easier for us to continue up, and our downside will be covered a little more. But right now, as long as we're under it, we could easily tap it today, and if we don't see that spike tomorrow morning, we can fall back again down to this like low trend that we're seeing here. So it's possible that we just consolidate tomorrow. We may not see upside. If we do see upside tomorrow, and so say we spike in the morning, and then like we have one of these days, you know the ones, right? Intraday cup and handles. If we see this, Be wary next week, next Tuesday, Wednesday, of a rug pull, because this is similar to price action that we saw last November, right? Last November on Friday, they started hedging much earlier. Turd's already noted, as have several other people, that they are starting to close out XRT put positions. There's still a shitload of them left, but we are starting to see some rolled, some closed. So be wary that there are things moving already. You call them intraday cup and handles, but really it's just them trying to cover without jumping the price too much. I wouldn't look for a touch at Gamma Max tomorrow. I don't think we'll hit Gamma Max tomorrow. Gamma Max is at 160 right now, up here. That'd be a hell of a move, right? That'd be like, if we hit Gamma Max tomorrow, this shit could go crazy next week. There's already a lot of calls right now. We'll see how much put call ratio drops tonight, but I suspect it will be far more call favored. Lots of calls coming into the end of the day as well. Yeah, that's because IV's rising. So generally in our OPEX runs, like Thursday and Friday, the week before, sometimes Wednesday, as early as Wednesday, IV will start to bump. And this is a lot of this is the market maker pricing in the moves, right? And call interest is picking up, right, which generates more IV in the strike. So if you bought, calls on Wednesday, even though the price might be down, the IV on your call might be up, because not only has the OI on that call increased, volume on that call has increased. Yeah, all those puts look like they're going to sell off tomorrow. I don't think there's any value in them left to roll, right? I don't think they're going to flash crash us. I don't think they have the... I frankly don't think they have the ability to flash crash us right now. It'd be very risky for them to do it, especially right before OPEX like that. Well, I don't want to say they don't have the ability. They do, but I want to say that it's unlikely. It would expose them to a lot of undesirable risk. It would also make calls super cheap, which will cause FOMO and shares. Expensive mistake, those puts. It still looks more like marking long. Why hold them, right? Like, if it was an expensive mistake, that was really obvious this afternoon, and they didn't close them then, right? It's got to be a mark long. Nothing else makes sense. Because they started placing those puts on 512, right? And then throughout this entire run, they continued to buy puts under the rising price action. And even today, they're still fucking buying them. So the only thing that makes sense here, and really not selling them ever, right? The only thing that makes sense here is that that negative delta can drag the price, right? So it keeps the price from moving up too much. And B, it marks long FTDs. Which is also backed up by the in the money call exercising. So if both of these are for FTDs, and we see rising FTDs into the end of May, so we know FTDs were going up back here, it makes sense, but it's still a lot of fucking money. It'll mark the only time a put position that large has not been driven in the money on GameStop, which is bullish as fuck, honestly. Because they've bought those on GameStop in the past, but they always drive them in the money. Like December, November, they fucking just slam the price into those puts. This time, barely tapped them. The closest we came was on the 16th. Or the test of 116. Sorry, not the 16th. The test of 116 on Monday. Nah, I don't see it. I think they've already rolled and cleared those FTDs. Compounding gaff. Increasing in number, not decreasing in number. That's my point. Sure, they've cleared them. Who gives a shit? But they're going up. They're going up well in excess of anything we've seen in the last fucking year. Since what? August? I think August might have been the last time we saw GME when they cleared out that last chunk left over from the offering. So, sure, it may not be that high yet, but they are increasing. Who wins in a fight? Gaff or a bull? Enough said. They mark their short sell long. It allows them to take advantage of Reg T, which allows 35 additional days to clear their failure to deliver. Oh, his bearishness is backed up with data. I mean, our FTDs, he's right. Our FTDs are not as high as they were last year, but I don't think they should be, right? I think this is a compounding issue. I think we'll continue to see FTDs rise. I think borrow rate tipped up yesterday, probably tipped up again today. I think we're going to see borrow rate continue to rise into OPEX. I think we're going to hit a higher high on this OPEX run than we did in March. Maybe not as high as we saw in May. I wasn't able to get a coherent question, but I did want to send you a Ko-Fi. I appreciate all you do. Thank you so much, man. I appreciate that. Big Diggler. It's within marking law, and they're kicking the can out to July-ish. Yeah. It's more bullish for future OPEXs. I mean, OPEX isn't an FTD event, right? It is, because the ETF obligations are generated due to FTDs, but it's not an FTD event. Like this was our FTD like event, right? Right here. For the last cycle. Some of this too, I think. A little bit of this. But like OPEX itself is not an FTD event. It's a gamma exposure and forward contract closing event. Gaff just wants to be contrarian. August we saw FTDs at a single day, nearly twice what we saw end of May. Increasing doesn't necessarily mean there is built pressure. There's reduced liquidity and the entire market is capitulating because cash is king. Significant risks aren't being taken right now, only necessary ones. We'll see, right? On the next FTD report. What if they continue to climb? I understand that it spikes in excess. And yes, I understand that spikes put more pressure on CNS than slowly increasing obligations, but their options plays indicate a pretty desperate attempt to clear those FTDs. Anyway. Will you buy tomorrow or wait till Wednesday to buy calls if playing it safe? I mean, I bought a bunch today. I'll probably buy more tomorrow. I'll buy more next week. All the way up until we start running. which may or may not happen. We still have yet to see what's going to happen next week. Still looks good from our side. Looks even better from our side than it did yesterday, but always be cautious. Do not play options if you don't know how. And do not ever risk more money than you were willing to lose 100% of. Spy's looking for more trouble tomorrow. Yeah, it's possible. A Bank of Japan meeting tonight could be important. I don't think the relief rally in treasuries is going to be enough to stop them from, worrying about their bond conditions. It offsets the risk in their bond conditions a little bit, but they could still sell off treasuries in a big way. That'd be a catalyzing event. All right, thank you guys so much. I will see you, I hope, tomorrow morning. This is TradingView. Thank you so much, guys. Have a great night.